Hi, let's talk about Sunrun. It's a quite big company that engaged in design, development, installation, sale, ownership, and maintenance of residential solar energy systems in the United States. It has pretty much upside, 56% upside currently. In good scenarios, 12-month forecast could be even $90 per share. So this is, I think, based on tip ranks, easy doubling, because they had pretty much the same numbers in the mid-January this year. So the highest point were 100.93 volumes at that point, 5 million. This is also a highly liquid company. So we see that there's currently raising the volumes for 12 million by this day, 11% up. Revenues forecasted to grow 13% per year. There's a lot of risks. Earnings are forecasted to decline by an average of 25% per year for the next 3 years. Debt is not well covered by operating cash flow. Shareholders have been substantially diluted in the past year. Volatile share price, as usually I do research only. Highly volatile share price, and also their share are liquid and stable. Volatile share price, so this is pretty much on the volatility, and also significant insider selling over the past 3 months. So let's take a closer look. They have proxy vote issue, AGM, so general meeting, special calls, seeking acquisitions, earnings updates, and so on, that led market performance. 1 year return 123%. This numbers actually beats the industry and the market, but long-term price volatility considered as highest. And by the way, the industry itself considered as more volatile than the average market volatility. So this is actually US electrical volatility over the past 5 months. Related to market, beta is 1.36. And here's the one interesting thing: 3-year return 211, 5-year return 631%. Huge returns long term. Valuation side, Simple Wall Street does not have any stock price targets, but as I said, tip ranks has 74 currently, in good scenarios even 90. And Market Watch has pretty same in highest point 91, lowest 50, average $76 per share. And the future growth is forecasted to decrease by 25.8%. So I'm not quite sure where this coming from. It's actually, so there's a good forecast for the revenue, but the earnings are forecasted to decline. But I'm not quite sure about this forecast, because if we open up the Simple Safe dividends, that shows total sales are growing like very nicely for me. They reached 1 billion in total sales last 12 months. But there is also this kind of issue, I think, that shares outstanding keep increasing. So this is actually not good for the investors, shareholders, but for the company, this is very often, very usually, the company do this by putting more shares out to collect some money. But if they have the depth, so let's take a look at that point. Earnings per share growth is forecasted. I'm not quite sure where this is coming. So December 31st, so end of 2024, it could reach the lowest point. EPS range -12 to -0.9. in the company were showing the profitable quarters. So basically, I'm not sure where this forecast is coming for, but I know Simple Wall Street is calculating mostly based on fundamentals. Past performance, historical annual earning growth decreased by 45%. So they had good years, and currently there's downtrend. But currently the company is unprofitable. On the financial health, we need to check the depth. So debt to equity ratio 72.7%. It's high. Cash, minimal cash. So this is actually, I would not consider this as a critical situation, but still the debt is raising, and currently the equity is covering the level of debt, but still this is pretty concerning situation. Balance sheet, so debt 5.4 billion, physical assets 8.6 million, long-term other assets 5.2 billion, short-term investments 649 million, inventory 289 million, receivables 125 million. They are not paying dividends, and on the insiders, so there were sellers, but let's have a closer look. Yeah, so there's nobody of the insiders brought the stock, but this is actually showing that there's individuals and also the companies that have been selling. So Tiger Global Management last October at price 60 sold pretty $500 million or even more. So this is actually, I think here's around 1 billion I see here, and some of the others. So mostly you see here that insiders are selling, and last transaction were 4th of May last month. Ownership breakdown: institutions holding 86%, hedge funds 8%, individual insiders 2.8%, and general public 2.6%. And here's top shareholders. So there's actually on the both side, but mostly I see here green. The biggest shareholders are BlackRock, Vanguard, and FMR company. Okay, BlackRock and FMR has more than 1 billion in the current value, but I see here Vanguard is increasing as well as the BlackRock. Last reporting holding date 31st of March. So this is not quite fresh data here. But anyway, let's continue. As I said, shares outstanding keep increasing, total sales keep increasing as well, but if they print too much shares out, it could be affecting directly on the share price, as you can see here. So there's currently short-term downside. So this is actually downtrend, but the levels are the same as we had in previous year. For example, September, and yeah, so this is actually 1 year frame. If we open up 5-year frame, this graph looks pretty nice. So those who invested, for example, 3rd of January, they had in the peak 571%. Those who invested there are currently sitting, minus half. And let's have a look at the investing.com, what it said. They range 44.27. Investing.com selling the stock for long-term investors as a neutral by moving average buy and technical indicators neutral. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.